Let's check the economic news. The September quarter wage price index has just been released by the Bureau of Stats. Let's go to our business reporter, Ed Boyd. Ed, economists had been expecting the rate of wages to moderate. What have we seen?
That's exactly what we've seen today, Kieran. Wages growth has moderated in Australia during the September quarter. It's actually come in a little bit below what economists were forecasting. So on a quarterly basis, wages have lifted by 0.8%. In the September quarter, the expectation was for a 0.9% increase. And then at an annualised rate, wages were expected to come in at 3.6%. Instead, they've come in at an annual rate of 3.5%. So slightly weaker than anticipated. The ABS say in the September quarter, seasonally adjusted wages rose 0.8% for the third quarter in a row and 3.5% over the year. This was the lowest annual rise for the wage growth series since December quarter of 2022 and followed 4 consecutive quarters of annual wage growth equaling or above 4%. It says a similar proportion of jobs recorded a wage change over the September quarter. Remember, in the September quarter, the Fair Work Commission increased wages for minimum wage by 3.75%. The year before, it was 5.75%. So we've seen some lower wage increases from the Fair Work Commission, and that's one of the main reasons why wage growth in the September quarter has started to moderate. So we've been on basically above 4% now for quite a while. Now at an annualised rate, we've come under 4%, and it looks like wages will continue to slowly ease over the next couple of years.
Ed, these numbers are they're obviously closely watched by the RBA. What are they hoping to see in all of this?
Well, the RBA released their statement of monetary policy last week when they put out their recent cash rate decision, basically their economic forecasts, and they're hoping to see wage growth moderating. So today's numbers, wage growth has moderated more than expected, not just on a quarterly basis, but an annualised basis. So I think the RBA were pretty happy with today's figures. It's not going to cause them to need to lift interest rates. That's the big thing. So the next move by the RBA is going to be rates falling. The question is whether it will be in February next year or potentially a couple of months later. But let's have a quick look at the stock market reaction. We should have a live chart we can put up showing the ASX 200. It hasn't moved too much. It was down about 1.2 and a bit percent before the figures came out. It's come in basically at the same level there after the numbers have been released. Let's go to the next page. Look at the Aussie dollar. It was buying 65.5 US cents last night. Aussie dollar has fallen again. And that's really due to the strength of the US economy and all the positivity there coming from Trump winning this election. Share markets in the US have really accelerated. The value of the US dollar has increased substantially against other currencies around the world, and our dollar has fallen off the back of that. So the next big move, Kieran, that the RBA will be looking at will be tomorrow with the unemployment figures. So we're expecting the unemployment rate to stay flat at 4.1%. So we're expecting to see a continued tight jobs market in Australia's economy as well.